We have just a few hours until the next potential Bitcoin boom. Pay attention. Donald Trump is holding a press conference today where he will talk about tariffs. We've seen in the past few weeks that the market has been very, very volatile and has reacted with a lot of uncertainty to his announcements. So we need to brace ourselves for the possibility of volatility here. But let's take a look at what that means in detail. Also, the new producer price inflation has just come out and it's shockingly high and above expectations. It seems like the Fed is losing control of inflation and it's escalating. That's also concerning because it brings uncertainty to the markets and means we probably won't see any interest rate cuts for a while. On top of all these alarming reports, there's also the possibility that Tether is about to do a big Bitcoin sell-off. But we also need to look at the bigger picture in the long run. In the short term, there are definitely some things that are bringing uncertainty to the market. It's also not a given that something really bad will happen at the meeting with Donald Trump later on. Maybe the market has adapted to this, or rather it is very, very likely. Maybe not much will happen there at all. We need to keep a close watch on it because we all know that Donald Trump is unpredictable. And he can always drop some bombshells and impose tariffs that might be even higher than expected. You just never know. We need to keep an eye on it. But you definitely need to be careful right now if you have too much leverage in the market, because the volatility could lead to you getting liquidated really, really quickly. I always recommend not to do leverage trading or anything like that. HODL is simple and good. And above all, look at the big picture in the long run. Long term, the signs have never been more bullish than they are right now. And then people let themselves get rattled by some short-term events. I never really get it. But yes, it's just that many people don't. Look at it over a 5-year or 10-year period, not just a 3-week period. And in a 3-week time frame, it definitely looks, let's say, very, very uncertain. There's a whole lot of uncertainty. But now let's take a look here and start with the new inflation data. We've already received the first inflation data, which was also higher than expected. The central bank said not long ago, yes, inflation is declining. Everything is fine, that's it. Now you see, no, inflation is coming back. And all of this is happening, even without any significant interest rate cuts happening here. That means the pivot the central bank hinted at last year has definitely failed now. Because right now, it doesn't look like there will be any interest rate cuts, but rather that there might only be one rate cut this year. Some say there will be 2, while others say there won't be any interest rate cuts this year at all. Producer price inflation is rising in January, unexpectedly at 3.5%, which is above the expectations of 3.2%. That's really a huge difference, 0.3% here in the inflation expectations. You don't see a big spread like this very often. Core inflation, the producer price index, was at 3.6%, which is above the expectations of 3.3%, so that's another 0.3% spread. Producer price inflation is now at its highest level since February 2023. Meanwhile, the consumer price index, CPI, has risen by 0.5% compared to the previous month. So here's the confirmation again, the Fed pivot is definitely over now. And now here comes the kicker. To make the whole situation even worse, the producer price index for December would be revised upward from 3.5 to 3.7. So we need to critically reassess the past numbers now. That's happened quite a bit where the inflation numbers or the unemployment numbers go up. So in December, we definitely had 0.2 points higher inflation here in the producer price index than reported. This comes after the biggest monthly increase in CPI inflation since August 2023. And as it stands now, inflation is far from gone. And now, I think in the last 3 videos, it's always been about the inflation topic. And also always about Donald Trump versus Jerome Powell. That means Jerome Powell doesn't want to lower interest rates. But it's also clearly confirmed here. I mean, this data clearly confirms Jerome Powell's stance that Jerome Powell is saying, no, interest rates definitely need to stay the same. We actually should almost raise interest rates now. It's just crazy how the inflation data looks here. And on the other hand, there are factors like Donald Trump, who wants to lower interest rates and who also wants to pressure Jerome Powell to lower interest rates. Regardless of this, at the long end of the 10-year government bonds, there is this Department of Government Efficiency, with Elon Musk and Donald Trump wanting to lower the 10-year government bonds by improving the state budget. I need to explain that again because some people got that wrong in the comments. They then said, hey, that's not true at all, what you're saying. We need to differentiate between short-term and long-term debt, or between the short end and the long end. That means the key interest rate can be set by the Federal Reserve. That's just an interest rate that can be set arbitrarily, and that determines the short end of the interest rates. But then there's the long end of the interest rates, and that won't be that bad, barely influenced by the Federal Reserve. It's about the 10-year government bonds in the U.S. And if you want to lower the interest rates here, Jerome Powell can't just say, okay, we're lowering the rates. Instead, the demand for U.S. government bonds has to go up. And that happens, for example, when you budget the budget better, when you're more efficient, when you create more trust in the country, when things just work better in the free market. More people buy government bonds. Or you could fake it by having the central banks buy the government bonds. But that's how you can control the long end. That means the central bank has no direct influence on the long end, unless they implement QE programs and buy their own government bonds. Then you can definitely control the long end here. That's what they call yield curve control, where you control both the short end and the long end. But that's not really happening right now. Instead, we see that Jerome Powell has the short end under control. Or what does it mean to have it under control, but the short end is being managed? And Donald Trump and Elon Musk, they want to control the long end now. And now there's this conflict where inflation is getting out of hand. And then you can make fewer interest rate cuts because that's very, very dangerous if you potentially drift into hyperinflation or something like that. And if the interest rates aren't low, then people will take on less debt. Then there's less venture capital. And the venture capital is missing here to pump up risk assets like Bitcoin or tech stocks and a lot more. And what you might also want to add here is the PPI, which stands for Producer Price Index or Producer Price Inflation. That basically reflects the consumer price inflation here. It's basically a leading indicator. So if we're 0.3 percentage points above expectations, that means sooner or later the consumer price index has to go up here. So the normal consumer price inflation. Because when producer prices are higher, eventually those increased costs will be passed on to consumer goods. Maybe not 100%, but at least 50, 60, 70% or something like that. And then we also have higher consumer price inflation here. That means we are seeing some really alarming numbers right now. On the other hand, you could also say, okay, if they can't get inflation under control at all, and we end up hitting 10% inflation and everything goes to hell, you could say that's good for Bitcoin because it would bring a lot of investors to Bitcoin since they'd realize, hey, your money is inflating even faster now. There's also the good example from Hans Werner Shin. That means you try to create a little bit of inflation. You have this ketchup bottle and you try to pump the ketchup out a bit. So you try to get it out, but it doesn't work. So you shake it more, shake it more, shake it more. And just like that, the whole ketchup comes out in one go. And it's often similar with inflation. And then the whole inflation dynamic comes all at once. And then it is very, very difficult to contain inflation again, especially if the central banks are always running after it. And in certain situations, you just can't rein in inflation anymore. And that's how hyperinflations or really severe high inflations come about. And the next highly alarming event is actually here. Donald Trump. He says yes. Today at 1 p.m. he will hold a news conference about mutual tariffs. And the market already knows that it's coming. That might already be expected by the market. Are there going to be mutual tariffs? Maybe that's already been priced in, but with Donald Trump recently we've seen so many, let's say, excessive statements that were different to what the market expected, which then led to a lot of uncertainty. We've seen it time and again. Donald Trump has announced tariffs, and this is already the second or third time. I think it's been twice already, or was it 3 times? I'm not sure. He announced tariffs, and then the market initially crashed. Then he eased the tariffs again, and there was another rebound. The next time, he did the exact same thing. Announced tariffs, the market crashes. Then he says, okay, it's not that bad. We'll ease the tariffs a bit. And then there was another rebound. And now we need to be careful about what happens here. I'm not saying that we have to expect the worst case scenario or anything like that. I assume that not much will happen because this has been relatively announced. The other statements he made weren't really well announced. That's always the thing. Statements like that are especially bad for the market. If it comes unexpectedly, that's one thing. But if it's expected, then the market usually reacts a bit better. He also writes in a tweet, 3 great weeks, maybe the best ever. But today is the big day. Reciprocal tariffs. Well, reciprocal tariffs is, I think, a bad translation. It simply means mutual tariffs. Let's make America great again, shall we? With that, he wants to make America great. I said it before, I'm not like that now. The mega fan of tariffs, I just think free trade is actually the coolest. But sure, with that, he might strengthen America. Maybe weaken other nations. Many also assume that maybe the strength of the dollar here will be boosted, and other nations will then massively devalue against the dollar. But there are also other people like Luke Roman who says that if Donald Trump goes overboard with the tariffs, like if he imposes 100% tariffs on people who don't use the dollar or something, it will lead to questioning the dollar in the long run. More people will jump off the dollar and start building their own payment systems. And that could be the end of the dollar. That means it's a tricky game that Donald Trump is playing here. On one hand, it can strengthen the US, but if it goes too far, it could lead to a dollar collapse. So we really need to pay close attention here. This is also very, very relevant for Bitcoin, what all this means, because Bitcoin is not independent from the global markets or the US dollar. That means Bitcoin is involved in all these decisions. Please let me know in the comments below whether you really expect there to be a massive bang here, whether there will really be a bang, whether there will be a massive setback. Or do you say, hey, you're pretty chill about it, or do you even hope that there's a dip because then you can buy Bitcoin at a better price? By the way, if you want to buy Bitcoin, I'll drop a link for you down below. 21 Bitcoin, how you can easily, safely, and simply buy Bitcoin. Here I get it with the code. You can save up to 20% on fees when buying Bitcoin. And then we have another piece of news here. It's not certain that this will happen, but it's being called breaking news. JP Morgan says that Tether might have to sell off large Bitcoin holdings to stay compliant with the stablecoin regulation in the U.S. So Tether is also making a headquarters switch to El Salvador. And Tether is also a big buyer of Bitcoin because Tether is the most profitable company in the world. It has massive surpluses. It's basically a money printing machine. And they're pumping those surpluses into Bitcoin. And that's why a lot of people celebrate Bitcoin and Tether. That means some people celebrate Tether because they say, hey, they're buying a ton of Bitcoin. Others hate Tether because they say they've created a private level CBDC light. And we also know that the regulation is getting, let's say, stricter. Tether is also being looked at in Europe by some publications. We really took a hit there. In the US, it looks like the regulations are actually getting better here. But now there's the report from JP Morgan saying that Tether might have to sell off massively for regulatory reasons. But someone already wrote here very, very well in the comments. That might also be the reason why Tether is switching its headquarters to El Salvador. So why they're going to El Salvador is to possibly bypass these regulations so they don't have to sell off here. We need to keep an eye on that as well. Whether there's going to be more buying pressure from Tether. I don't know how much they would have to sell. But there's always the debate, okay, is Tether backed or is Tether not backed? And the US wants to ensure that Tether is backed 1-to-1 by US Treasury bonds. And then if Tether is also involved here. If Bitcoin has that, then there are certain fluctuations and so on. And the US has an interest, especially in selling a lot of those Treasury bonds, so they basically want a ton of people to buy those bonds. And I think that's just the debate going on here, where the US is saying, hey folks, no, you can't hold too much. Hold Bitcoin. Because it's just regulatory difficult. You need to buy even more US Treasury bonds. Yeah, that's what this discussion is all about. But I don't want to make you seem pessimistic. In the long term, looks good for Bitcoin. Don't let yourselves get discouraged. Really take it as an opportunity to buy more if there are any pullbacks. Samson Mao makes a good point here. 6 ways to trigger the Omega rocket here. He says here, first of all, Bitcoin could be massively boosted by a supply shock from MicroStrategy and ETFs. So if MicroStrategy and ETFs buy even more Bitcoin, that could trigger a supply shock that could send Bitcoin to the moon. Secondly, state-level strategic Bitcoin reserves, meaning that states at the federal level buy Bitcoin. Thirdly, the U.S. Federal Strategic Bitcoin Reserve, meaning that Donald Trump and the U.S. as a whole buy massive amounts of Bitcoin, rebasing the U.S. dollar to sats so that the U.S. dollar hyperinflates and we have a sats standard, basically a Bitcoin standard. Sure, that's still a bit far off. But if we hyperinflate this thing, right now it doesn't look so great with inflation. But we're still a long way from hyperinflation. Then we have the 5th point that can escalate Bitcoin. Nation-state Bitcoin FOMO, that means if countries start battling each other over who has the most Bitcoin. Then we have the 6th point, demonetization of gold to acquire Bitcoin. When people realize, hey, gold doesn't have the same awesome properties as Bitcoin, we sell our gold and buy Bitcoin with it. Bitcoin, just like Cynthia Loomis suggested. And those are 6 points that could really send Bitcoin to the moon this year. Even though you have to say that these aren't highly likely points or anything, they're definitely something to keep in mind. Aside from the national strategic reserves at the state level, that's probably going to happen this year. So the probability is definitely there. And also that the stockpile comes at the entire country level, meaning that the federal government buys Bitcoin. But that's more likely to happen in Q3, if not even Q4. Guys, what do you think about these wild times? Let me know down in the comments. Peace out.